We're back for another couple market recaps for Friday, April 11, and today, Monday, April 14. I did not make a video for last Friday, so I'm just going to cover both days today. So we had this big reversal candle on Wednesday. So far, all they've managed to do is retrace portions of that move and haven't gotten above it, which could have continued this move out, and they still can do it, but they might not be finished on the downside either. The way they're kind of hanging out here. There was an area, we had a zone down here below the low that they got. This was a good place for them to reverse, but there would have been very strong support right underneath, which is kind of off the table at this point. We're going to see what they do. They're still in the middle of this area trying to fight the high of this, and they've got other places of resistance to get through before they can go higher. And we're just going to approach that day by day, hour by hour even, and we'll see what they do in the overnight session. I'll just throw a quick trend line here. This is from the high back on February 19. Just kind of split the difference. Here's a kind of a pivot high. We could make this different ways, but since they fell away pretty strong from this area and they haven't got back up to it, odds are this general area is going to be some type of resistance. At least they've got to fight through it to go higher. We're going to see what happens. They're getting close. If the bulls continue to push price higher, that will probably be resistance, and we'll cross that bridge if and when we get there. Friday morning before the market opened, here were the levels that were sent out and the game plan that you can read through if you'd like. While the levels did work toward the end of the week, and Friday would have given some good trades, I'm not going to count the trades, but like the rest of the week, it was just one of those days where volatility was likely to be high, and while the levels could work with kind of longer-term support and resistance in mind for longer-term plays, with the strategy that we use, trying to get precise base hits, it makes it more difficult when there are big swings and ranges, and price can spike through the levels a lot. But we're going to look at price and what it did with the levels for the entire day on Friday, and how you could have pulled some points if you chose to trade. So this is Friday, and of all the levels that we had, 2 were hit. This 524.58, this dotted line is essentially the close of the previous day. So if you're going to trade this thing, sticking to a process, you would have waited till after 9:45 and then taken a trade depending on how the price came back into the level. And they did at around 10 o'clock or so, and they bounced. So while this would have worked, you would have been out of the money quite a bit. These are still big moves. So think about it. You would have gone long at 524.58. You would have had to withstand them being down to 523.40 something. This is over 10 points, but just a few minutes. And then they bounced, and that was way more than a base hit. They didn't really get underneath it long enough for you to take a recycle trade here. They did react several times, bounced around it. So that would have counted as the recycle trade on the short side. So not going to do it again. That was the first time they hit it. So while they did react a little here, you wouldn't have taken it the second time around. They went up to 532.19, hit it, bounced away. I did take a trade here, and got a few points. We'll look at that shortly. 2 trades so far, 2 base hits. You're not going to take this on the short side again. So when price got above 532.19, notice the time, it's 1:40 p.m. Got back into it the first time at 2:20. So plenty of time has passed. You can trade this level on the long side. So that will be 3 base hits if you were playing by the rules, but we're not going to count any of these trades on Friday just because of the volatility, and we would have played it safe because it's better to end the day on the flat line than to risk losing dollars. But just want to point out that volatility is allowing these levels to work a little better, and today on Monday, which we're going to look at in a minute, the levels worked very well, and we had some trades as expected. Here are the levels and the game plan for Monday. You can read through that. Notice the time that was sent out. I did say in the game plan that I did not think things had settled down enough to trade with the usual base hit approach. So with that in mind, there were several zones on the board. If you could just look at the market in the big picture and see that these zones are still places that price could react from. If you're willing to give trades more time and understand that price could spike the levels in these zones, then trades are possible. And there's 2 trend lines that have been on there since last week. We talked about that. And in the pre-market, price was messing around with the lower trend line, trying to get above it. So early on, at least, it looked like the bulls wanted to get above that trend line, and that came into play with the trade that I took, which wasn't quite by the rules, but it'll make sense when we look at it. Right now, we're going to look at the recording of Friday's trade. So this recording on Friday starts a little late. It was about 25 minutes or so after the market opened. I was busy in the morning. I hadn't done anything at this point. They were messing around with this 524.58. And the trade that I took was when they went up to 532.19. They got above. It happens pretty fast, so I'm just going to try to pause this right when the trade is entered. I went short with 2 contracts when they hit 532.19. And I think I took 7 points off. So incidentally, this is not a near miss. They were not close enough to the level, even as adjusted, for that to be a near miss. So still willing to take the trade. And there we go. I just paused it here to show you that as soon as they hit the level, pulled back pretty quickly. That's 7 points in just a minute or so. And that was it. Took one trade on Friday, and I was happy with that. Moving ahead to Monday, that's today, here are the two levels. Well, one's a trend line, and this other level were hit. So two trades. After 9:45, price was down here somewhere. They're coming up into this trend line. If you've gone short of the trend line, and understanding that if they move a little bit, you have to withstand them being out of the money for a little while. So just a few minutes of this out of the money, which is maybe 10 points or so. Let's see. Gone short at 5:42.36, thereabouts, up to 5:43.45, but they came down as designed. So that's one short trade. They didn't really get above it at all until over here to take a long trade, but by the time they did this, it was after the line in the sand, so we're not going to worry about that. So it's one short trade on the trend line. Came all the way down into 534. Pretty obvious to see that they bounced pretty well on that level. So at least 4 points, a lot more if you're willing to hold out, because that's the thing. When you have big swings, market's been telling you that they're not quite settled down into like normalcy anymore. Like, why settle for just 4 points? Go for more. I got 10 points up here, and I'll show you how I did that. So I did start the recording this morning before the market opened, so got the whole thing here. But I did not do anything. I didn't take that short trade initially. In fact, I marked the level dotted just because I really was thinking that they were probably trying to go higher. So I gave them some time. Since they had been hovering under this trend line all morning in the pre-market, I thought the bull's probably going to try to get up there to 544.88 at some point. So what I did, and this is a little unusual here, is I end up going long right here when I thought they were going to try to get above this. I gave myself a pretty healthy fumble threshold down here. Never came into play. They never got down there. And so while they attempted this 8 points, got close to it a couple times, and kind of came back and got another start, I thought, well, they're going to go higher. And sure enough, they did. So I pulled it up to 10 points, and you saw that $1,000 there. And really, at that point, they never went a whole lot higher. So they came all the way down to 534. Didn't take that trade. I was just happy with the 10 points. And stopped this when I got back from lunch around 1 o'clock, just like I did on Friday. So that was the one trade today for 10 points. And it makes the tracking logs look like this. So read the notes for Friday. Once again, just saying the prudent trader would not have touched the market today. So all week long, just playing it safe means no trades. Although, as you have noticed, if you've been paying attention, at least 2 or 3 of these days, those levels would have worked, but you could have got yourself into some trouble earlier in the week when things were going crazy, especially on Wednesday. And then today, the 14th, 2 base hits, 8 points, and you can see where all the metrics are with that new data. And then my trades here, 7 points on Friday and 10 points today. So that's a wrap for Friday and for today, Monday. Hopefully we're getting back into what we could call a normal market. Still going to find the levels the same way I always do, but still being aware and sensitive to the fact that we could probably going to see more volatility. It's not over yet. Back tomorrow morning with new levels, another game plan to see what we can determine that would help going into the day, trading these futures, trading these E-mini futures. I'll talk to you again in the next recap. Have a great day.